Hello everyone, Eric Monroe again, employee benefit consultant and financial advisor. I'm in the middle of my three-part series on small business retirement plans. We covered the SEPs, and I want to cover next the simple IRA accounts. Even though it says IRA, it is still sponsored by the employer. This is for somebody who has less than 100 employees. If you have more, you cannot implement a simple IRA plan. But the reason that I like it and it's perfect for small business is, one, there's no setup fees, there's no legal fees, there are no administrative fees. Each individual employee has their own account, they manage their own account, they own their own account. All the employer needs to do is adopt this plan, set it up, and do payroll deductions, but they also need to match. But there's two ways that they can match, okay? Number one, you can match for everybody in your company a flat 2% of their compensation. So at the end of the year, whatever their total comp is, you make a contribution of 2% in their plan. Not a problem, 2%, great incentive for people. Whether they contribute or not, you're still going to give them 2%. The other option to run this plan, and the reason I like it is because it is flexible, is to give your employees incentive. You can contribute and match only those that put money in themselves. So if you have half your employees that don't participate and half that do, you only match the half that do. But your match is a little bit more. It's 3% max of their compensation for the year. Only if the employee puts in 3%. If the employee puts in 2%, you only match 2%. So there is a cap on that. But again, it's incentive. It's a way for you to provide another benefit to be an employee at your company and incentivize them also to help save for retirement themselves. Super important. We got to have ways, and this is part of it, educating people to start up plans and manage plans to give all workers a chance to save for retirement. So you can put away $13,500 of your compensation in the year 2020, and if you're over 50 years old, you can add a catch-up contribution to that, another $3,000 plus the match. Okay, so you can defer money from your paycheck, $13,500 per year. If you're over 50, you can add another $3,000. So you can put away at $16,500. Your employer can also match up to $16,500 as well. So if your compensation is fairly high, you can put away a maximum of $33,000. So it's 3% of your compensation as a match, plus the $16,500 as a deferral in your account as well. So again, there's no tax filing every year. There's no administrative cost. The only fees involved are whatever investment platform fees that you choose. And there are a number of companies, very good investment companies out there that offer this platform. It is super easy to manage, super easy to set up, super easy to communicate to employees, and very, very low cost, but still providing a fairly substantial benefit for people who want to save for retirement. So a good option. Again, the SEP's an option, the Simple's an option, and if you fit in the solo 401k market, watch that video as well and you'll learn if that's a third option that you might consider. But if you're looking to open a retirement plan, I'm happy to go through and model these different options for you and see what makes the most sense, talk to you about your goals and your budget, and figure out a way to get you set up, and then educate everybody on how that works. So please let me know if you do have questions. I'm happy to help. That's what I'm here for, trying to educate you and be a resource. If you like this video, please let me know. If you have any comments or questions, absolutely reach out to me. Thank you.